Also, oil. If we move over to WTI crude oil, US oil, today will be interesting. We've got the US oil inventories coming out today because we had a bank holiday on Monday. So we have the US oil inventories coming out this afternoon in approximately just under 2 hours at 4 o'clock London time. Now, what I would be looking at, there's definitely a battle between the bulls and the bears. You will note how much underlying support there has been just here around the 50-day moving average. That has been a very important level that traders have not been able to penetrate. Certainly, sellers in the oil market have not been able to break oil back below the 50-day moving average, especially on a closing basis. So we've got quite a lot of underlying support at the moment. We've seen oil break out so far today just below 55 US dollars per barrel. We had an attempted breakout with oil on Tuesday, which then sold into the close and closed back below this overhead trend channel. We had a push lower yesterday, which we wanted to see whether the sellers and bears in the market would be successful in breaking the recent underlying trend channel and support. However, we did see it get bid back into the close, and so far today, you can see we've already breached above yesterday's high, and we're making another attempt to break 55 US dollars per barrel. Now, if we move it over to the weekly chart, this is really what you want to focus your attention on if you're looking for new positions on oil. Essentially, it has broken above the last 6 weeks of consolidation here. We've broken above the key level of resistance of $54.66 per barrel. So far, though, the bulls in this market have not been able to maintain the price above this level on a daily closing basis or a weekly closing basis. If we can close above resistance on a daily and also a weekly closing basis, this turns into a buy signal. We would look to go long, and we'd be targeting a move back towards 60 US dollars per barrel. So we're keeping a very close eye on the weekly chart. You must look at the weekly chart if you're trading oil here. We'd be consolidating throughout most of 2017. The longer we stay in a range like this, the more likely we are to have quite a significant move once this does get going, once we see a clear direction picked. One thing to watch out for as well is bull traps at the moment. So getting caught out on buying oil on these breakouts when then it gets sold back into again towards the close. I am aware there are a significant amount of traders who are buying into rallies on oil at the moment. Are selling into rallies at the moment on oil, which is why on a daily closing basis, we're just getting these strong rejection candles form and we're not seeing follow through. So I would just put that on your radar, that really what I'd like to see here for oil in order to confirm a long, for buyers to get more heavily into this trade, would be a close here above the previous day's high and also above 55 US dollars per barrel. Also, if we take out the high from yesterday, which is sitting at the moment around 55 US dollars and 15 cents per barrel, if we take out that level, so we breach above that inverse hammer, that is also where we should see more momentum to the upside. Ultimately, if we see a break above $55.75 per barrel, that is where we should see oil really get going. We should see a lot of fuel behind this, and we should see oil catch fire for a run up towards $60. So that's what I would have on the radar right now. For me, it's not quite confirmed for buyers right now in the sense that we haven't had the close that we would like to see, and it is still vulnerable to selling pressure on the oil inventories. We'll have to see how those come out later on today. We've got those coming out in the next 2 hours or so. We'll see how those affect oil and whether we do see follow through to the upside or whether that produces more sellers selling into rallies here. So oil, though, is getting very close to a resolution, and I would also be monitoring this market very closely.